Hi, this is Jason Fielder with the Daily Forex Report for September 30th. Currently looking at the US-Japanese yen pair. This particular pair closed down today. Did have a larger range than previous day. We are looking for this pair to continue moving sideways with the bias that is sideways. Look for it to potentially move as high as 90.92, possibly as low as 88.70. Now look for some resistance around 90.50. and look for some support around 89.30. Now let's take a look at the Euro-USD pair. This pair closed up today. It is moving sideways. Biased is still to the downside currently. We are looking for this pair to potentially go as high as 147.53, possibly as low as 145.02. Look for some resistance around 14700 and look for some support around 145.63 in this pair. Now the pound US dollar pair, this pair closed up, but as you can see it moved much higher before pulling back to close basically below the high of the previous session. So overall this pair is moving sideways, but the bias is still to the downside. Look for this pair to potentially move as high as 1.6228, possibly as low as 158.37. Look for some resistance around 16100 and look for some support around 159.13 in this pair. Now the US Swiss, this pair closed 1 pip down, did form a doji bar, had a very large range today. We are looking for this pair to continue moving sideways with a bias that is sideways. Look for this pair to potentially move as high as 1.0511, possibly as low as 10218. Look for some resistance around 1.0403 and look for some support around 1.0282 in this pair. Now, as far as news announcements goes, we don't have any real news announcements until Friday. Tomorrow's a fairly light day as far as significant news. Now, what am I looking for during this next session? Well, not really this next session. This is a much longer play, looking at the US-Japanese yen, looking at trends. Let's start off with looking at the month time frame. I know that's a much longer time frame than a lot of people are used to looking at, but let's take a look at some things. We have this month's low so far right here at 88.20. We have a couple of sessions, or several weeks ago, the lows at 86.98. Then our next lows that we have as far as support right here, those are down at 84.03, and then the absolute low was down at 79.67. Now this was in 1994, so a very long time ago, but nonetheless these support and resistance lines on the month time frame could very well hold true. Now let's skip up to the week and zoom in a little bit. Now that we've taken a look at why we are looking at these lines, support and resistance lines, where they are, what I'm looking to do is basically take a short on the low so far at the 88.20 mark, probably the 88.19 mark, and put my stop loss right about here, which is a good distance away. It's about 200 pips roughly. In this one it's showing 300. Let me get down to the daytime frame. We'll get a little bit closer in on this one. Okay, here we go. Now look for, here we go, around the 200 mark. We have 208. We have this line basically of support and now resistance that has occurred. You're going to want to put a stop loss there. Get a break below 88.20. Got about a 200 pip stop loss. Interestingly enough, you got a 200 pip stop loss. You have your entry here. The first little area where you could definitely go to break even, and I would use, this is a very long-term trade. It does have a large stop loss, so you may want to use a little bit lower than average leverage. The first stop along the way would be around 122 pips down. The next one would be around 295 pips. And the very bottom, 436. Don't know if we'll get there, but total, assuming that it does get there, you could be looking at 853 pips total if this entry moves down to this point. Now, basically what I would do is look to go to break even at this point, then look to lock in profit, move your stop loss down to this point, lock in 120 pips worth of profit. As it comes down to this point, lock it in here. Then as it moves lower, go ahead and lock this in so that you lock in profit along the way. And you could do every 200 pips or so, but these are the support levels, previous support levels. So I do anticipate them being hit, possibly being bounced off of. You want to give this thing a lot of room, especially once you go to break even, because at that point it's somewhat of a free trade. So that's kind of the long-term scenario of the US-Japanese yen pair. I don't know if it'll get there, but historically we have, and we could very well get there with the dollar being weak. And overall, if you notice, this trend has been to the downside. So definitely keep an eye on this pair. Well, that about does it for today. Until next time, this is Jason Fielder. Good trading.